Morning all, how are we all doing? Mic working? Yep, good. Sorry, I wasn't sure. I then had another update on the mic software, so normally it breaks it. How are we all doing? David, morning. Have I ever told you you're the best? You have, thank you. It's always good to hear every morning though. Morning, welcome top. We all want purple, and I have it. Okay, that's a cryptic way to start the morning. Morning, Stevie. Morning, Steve. Morning, Neo. Martin, it's time for Guinea. Jacob, how are we all doing? Right, let's kick off with morning, Amy. Where we are with stuff, basically. Aussie New Zealand is still thinking about going long. We had the only reason I'm concentrating on that because that's the only one I'm really in deep at the moment. So news-wise, we've got the Swiss currency reserves in 7 minutes, just so you're aware, at 8 o'clock. We might have an explosive move this morning on the DAX, so just bear that in mind. It's a hit and miss news event, this. The Swiss banking system is very important to every currency. So the reserves obviously are a kind of buffer, if you like. And it's a little bit like the oil inventories. When they're down, it's not good. When they're up, it's brilliant, sort of thing. So just sometimes it does make the Swiss go crazy for a day. But today we've got the Bank of Canada rates. We had low speaking overnight, and the GDP that came out as a negative for the Aussie, which is good. So we're looking for some Aussie dollar weakness. And we've had a bit of negative news on the GDP, which is good. They were expecting it to drop, and it did drop, but it dropped by more than they were expecting. And that's quarter on quarter, which is the most important figure. Low came out and said stuff, but nothing particularly impactful, I don't think, in there. Evidence suggests that increased interest rates are effective and that inflation is decreasing. So he's being a little bit bullish, basically. Journey back to 2 to 3% is likely to include a couple of years. That's normal, same for everything else, but that was it. So there was no forward guidance on interest rates given. But what was said was very much, looks like it's all going okay, which would indicate not too bothered about increasing interest rates. So that's slightly bearish, which obviously is good if you are trying to short the New Zealand dollar, the Aussie dollar. So this morning we've had a little bit of a run on the liquidity of yesterday's high. It is coming down now in the last half an hour. So we'll see. But yesterday, obviously, we had the big move. We haven't had that massive continuation, which is what I was expecting in Asia. I was expecting to wake up this morning and be stopped out in this aggressive position. Didn't happen. So it's good. No massive strength there. There's no ADRs so far today, so there hasn't been a lot of movement over Asia at all. Morning, Kennelly. Morning, Prodigy. Morning, Dreska. So that's the news overnight. There's not a lot of it. That's it, really. Today, we've got the big one for the CAD. So the market, I think today you will find will probably be fairly stagnant. We might get some ranges forming in London. And as the market is waiting for the Canadian interest rates to come out. So they're forecast at 4.5 to stay stable, which again could bring down that Canadian dollar. We'll see what happens with those. We had a surprise on the Australian. If you look at the Canadian rates, historically, they're pretty good with it. We had a little increase in June 2013 where they went up a bit more, but everybody was doing that at the time. We had one reduction October, but apart from that, they're usually spot on. If they say they're going to freeze it, they're going to freeze it. So if you look historically here, this will be our third meeting with no change on the CAD. So neither neutral, neither bullish, neither bearish, because we are just as we are with the CAD. The oil price is driving Canadian dollar and the oil price isn't doing great. So we'll see what happens. But that's the news today. So we need to be aware of that. 3 o'clock. That's half an hour after market open. So again, opening range breakouts today. We might have a very volatile one this morning off the DAX. We may well have a very whipsaw session in New York because they may not want to put a load of stock orders in until they know what the Canadian rates are. less impactive in the fact that obviously the stocks are traded in dollars rather than CAD, but CAD directly affects the dollar. So we'll see. You never know. You can't tell. This is part of the problem with the opening range breakout. Yeah, if we knew when the volatile days were going to be and when the whipsaw days were going to be, we would never lose, would we? So you don't. But so that's 3 o'clock this afternoon. Main news tomorrow, obviously unemployment claims for the US. So at the moment, the Aussie New Zealand's obviously holding up there at the minute. No movement yesterday. Had a load of drawdown control done yesterday. Obviously, everything exposed on the Australian dollar short obviously is wrong. So all that drawdown control had to be done on the Australian pairs yesterday. So just sitting in 10% drawdown, nothing has changed. So really hoping for some Australian dollar weakness today. There's nothing else particularly massively worrying in there at the minute. Everything is kind of not great, but not moving hugely either. So, DAX we will watch this morning, obviously, for the opening range. We've got a gap to the upside on the DAX to get completed. Yesterday, we had a kind of a sideways-ish day. This is where we were looking for a trade up into propulsion yesterday. We just about got in there, and then it gapped down again. So there's this massive 3-day move. I don't think that's a big enough move as a profit take off the back of that. Might be wrong, might be, but I still feel, as you can see, this is bullish, but not really, is it? We had a price discovery failure. So for me at the moment, this is the market saying, we're happy here. Should we try down here? Not interested. Should we try up there? Not interested. I don't think there's any real directional bias on this at the moment. So difficult to tell. We've got, if you look on the hourly chart, we've got 2 targets in play. We've got a gap fill to the downside. We didn't finish. We've got now the gap fill to the upside at the open. So the open could go either way. If we get the gap fill done, I think we're probably going to come down today. So upside targets are yesterday's high, and then downside targets are the gap fill. So both of those targets are kind of around about half an ADR, which means we might get sort of a rotation. So we'll see what happens at the open. We've got 30 seconds to go. Let's just watch the pre-market break. Morning, Burke. Okay, so there's your pre-market break. Wow, to the downside. Whoa, geez, that's painful. That's hideous. That's dead. How to lose probably about $2,000 in 2 seconds. $3,000. So risk on this is $500 per trade. You saw the slippage there. That was incredibly fast. Wow. This is the sort of stuff you are not going to replicate. This is never going to happen in backtesting, this sort of thing. Yeah, so that is a 3.2% loss on a total 2% risk. So it's 0.5% per trade long times 2, 0.5% times 2 short. Yeah, so 2% total risk, took 3% loss. I don't know, was that 1 second, 1.5 seconds? So this is partly why I'm doing this forward testing. I need to see what is going on in the real world when you get these sorts of moves, because this thing has absolutely destroyed it today, hasn't it? Look, that's your loss done for the day. No more trading today. 4.5 grand limit funded accounts. So this is obviously a demo account, but I'm treating this as if it was a funded account. That's 3.2% down. You've only got a 5% daily drawdown limit. So yeah, wow, massive slippage. Look at that on the 1 minute chart. That was literally all gone within that minute. So it has hit target to the downside. But yeah, there you go. So that was the DAX this morning. So if you're taking the 5-minute opening range breakout, you'll be going, haha, because that's not happened yet. Right, well, let's have a look at it on the 5-15. So your 5-minute, oh, that's your pre-market 15. Pre-market 15. Depends what the spread was. You can't tell what, I mean, that happens so fast. You couldn't even tell what the spread was. So did that go out long or short first? It went short first, didn't it? So it went short, spiked, and short. So on the pre-market 15, you would have been triggered short. It moved down, would have trailed you, stopped you out, and then gone. You wouldn't have made any on the pre-market 15 either today. That was a hit. I've not seen a move like that. It's the first time I've seen that, actually, isn't it? I don't recall seeing anything that aggressive in the at the open before. So that was a nasty one. Right. So obviously, initial movement is to the downside. So looking at the DAX, there is your gap fill. So if we are going to just run to the downside today and this initial break is just going to pull back and drop, then that's where you want to be headed. So it's not actually that far to go. We're looking somewhere in the region of 84 pips. So it's just below, basically, just below yesterday's low and the previous day's low, which is these lines here. So somewhere around here is your gap fill. So there's plenty of room to the downside for a run today. There we go. Morning, Andres. Stevie. I think a lot of us traders would like to see more on DD control, especially techniques you use and the strategy you apply. This would be great if you could do some videos. There's loads of videos on DD control. How to survive a squeeze is one of them. And obviously, there's a bit in Bootcamp. That one is. I did have a video. I had a video in the course from a live room session years ago, which was really good. No, I'm not sure if that does. No, not bookmark. I said F. No, it doesn't talk about drawdown control very much at all, does it? I did have one. Just wondering if I haven't got it on the channel anymore. It was a live room extract. Latest. Does that not give you all your videos? Live room extracts. I can do some on drawdown control. Morning, Michael. Got slip loads too, outro. Yeah, it's a nasty slip this morning, that was. Okay, so there's your 5-minute open. So that'd be your 5-minute ORB today. Worth a crack. Especially after that. So there's an awful lot of volume came in there, but it's gone very, very quiet. I think that, as I said, was the Swiss trade balance, currency reserves rather, 534 billion. I don't necessarily think that was obviously a position, but it was a bulk order going in. And obviously it got filled very, 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 very fast. There was an awful lot of volume came in. Interesting actually to look at the volume there. See what that volume was. Jeez, look at that. Look at the size of that. Right, so this is normal trading, right? This is the open volume, yeah? So volume after the open steps up usually double. Look at the size of that volume. That was an absolutely huge order went in there. That's not normal volume at all. That's why that happened. I mean, it's just one of those things. You're not going to experience it. So look, that's normal volume spike. Look here. Volume increase. That's that one. Look at that. That's double the normal volume. So that's 2 times the normal opening cash balance volume went in there. That's why that happened. But there's nothing you can do about it. You just, I mean, I don't think I've seen that. I don't remember seeing anything that ridiculous before. So just one of those things. Lost today. Nothing you can do about it. If you want to try and grab it back on the 5-minute ORB, obviously that is an option. I'll do a session on drawdown control today. We'll do it in a minute. On your live position trading account, you use 10k leverage to 30k. How does that work for you? I use topping up the account with a lot of DD. What risk are you using? Normal risk, 0.25% over half an ADR. I do top the account up every now and again. Yeah, when needed. Basically, when I've got 1 to 500 leverage, yeah. So the only time I need to top my account up is if I'm getting close to 30% drawdown, right? Which doesn't happen very often, ever. Doesn't happen. I've been in 20% of drawdown before, never more than that. So, but I do top the account up because what I don't want to do is get accidentally margin called. The danger you have is the margin call. The margin call happens over on the overnight swaps. So when they spread like that, yeah, if your drawdown here, for example, was 2% and they spread like that, and you've got 5 or 6 positions on, for example, the Aussie New Zealand. So yeah, let's look at the Aussie New Zealand. DAX looks like it's trying to rally short. So Aussie New Zealand, for example, is in 5% of drawdown. At the swap, that could go anything from sort of 7 to 8% in drawdown. If you've got 2 or 3 positions in like that, and you're adding 5 to 10% extra onto your drawdown on the swaps, which obviously isn't real, it's just spread, that can margin call you, and they will start to close out your positions. And then all of a sudden it all comes back to normal, and you're like, well, why'd you close my positions? Well, you got a margin call. Sorry about that. So you just make sure you've got more than enough in there. I don't really get close to needing to go anywhere near it. Think about it. If I was to ever get to the point where I had to top up my entire account is in danger, isn't it? It just doesn't happen. But because I'm leveraging more, 30%, sorry, it's 90. Sorry, that's not the right calculation, is it? 90% in drawdown on the 10k would be equivalent to 30% in drawdown on the account in total. You don't get to that level, but I do top it up, and then I pull it back out again. At the moment, I'm not close. I'm not topping up at the moment. It's when you're getting to levels which are, you're up at 15% on multiple squeezes and things go a little bit further because the speed of drawdown accelerates the more positions you have on. So what you find is you have this kind of curve of drawdown that happens. You get in and you get into a little bit of drawdown. And what happens is the drawdown, as you get squeezed, exponentially increases because you're adding more size as the drawdown and the squeeze gets worse. So the speed, the incline of the drawdown gets faster. So what you find is you start off, you're doing like 0.5% of drawdown, 1% of drawdown, 0.75% of drawdown, 1.5% of drawdown, 2%, and those numbers get exponentially faster and faster and faster until the squeeze undoes, and then all of a sudden that 10% turns into 5% in profit and becomes 3% of drawdown. But you're just waiting for that move to happen. So that's when you make a judgment call when you top it up. Entirely up to you. If you're trading with right risk, you shouldn't need to top it up often. It's not often I need to top it up. There is a backup, if you like. If you think about it, what I'm doing is I'm just 3x leveraging my account. So instead of getting in with a 0.25% risk, I get in with a 0.75 risk. Yeah. So I'm getting in with more risk. So my drawdown is triple what it should be. So if I get myself into 20% of drawdown on my entire account, my third of a deposit will be sitting at 60%. At that point, if it was to push further, you'd be in trouble. So you'd need to enter more money. It doesn't get there very often. But sometimes when I've got multiple aggressive drawdown control positions on, those will take me into further drawdown, obviously. And if I'm having a bad run and we've made a loss, and after making a loss, it then goes into drawdown, obviously I've got less money in the account to handle that drawdown with. So then I have to top up. But you just use your head. If your balance is getting too low and you're worried about it, stick some money in. You've got it there, so it doesn't, it's just common sense, really. What about the blowing up of the dam in Ukraine? Blowing up of this war, in it happens. Stuff gets blown up. Got slipped nearly double on the long and the short. Actually, more than double on the long. Off to work now. Have a great day trading. Outro. He's gone off to work in a mood now. Yeah, I mean, I got... right. Okay, we've just... this is a good one. Right, okay, so what I wanted to do with this new version of the EA was test a bad day. I completely forgot about this. So we just got an inside bar. So we have taken the inside bar break short. We have the inside bar break long in play as well. So this is a good test now of this additional functionality for the inside bar break, the loss recovery. So this either turns into loss recovery or max loss. Although I don't think I've got a max loss set because I wanted to test it and I haven't. So in normal circumstances, that would be set to 4.5K. So we literally would have one trade really to play with here. So it's either a max loss day or it's not. So that's taken the short, obviously, on that next position. And it will try and trade its way back now for the rest of the session into profit by taking inside bar breaks. And obviously, they will either work or they won't. If we're going to get a whipsaw session, it's exactly the same as the normal opening range breakout EA. It just will not work. There's nothing you can do. You can't trade a trend breakout strategy in a range. They don't work. So we'll see how that gets on. Right. Okay, let's look at well, obviously there's no ADRs. So ADRs, we've got none. Average weekly ranges, none. Monthlies, none. Flat so far today. So we've got a flat day today. Nothing is pushed hard. We're on Wednesday. This is where we typically start to see the weekly ranges getting hit. Nothing's being hit at the moment. So pretty calm month at the minute. Morning, John. So that's those covered. RSIs. We have got one RSI on the hourly, which is euro odd. That is still extended. So obviously we know the Australian dollar's had a big old run. We know the euro is weak at the moment. Propulsion gap targets galore to the upside. Which of these it's going to get to is a mystery at the minute. But obviously there's one there, big one from yesterday. And then obviously we've got these further propulsion gap targets to the upside. This is your previous resistance, or rather support, which will turn potentially resistance if we're going to continue the down leg. However, we shouldn't. So euro, we're just waiting for a news catalyst. There's nothing saving the euro at the moment. Lagarde's come out and said, yeah, rates are going up. Everything needs to go up. Everything's still going the same way. We need more. And they've increased the interest rates on the euro, and yet the euro just for some reason just cannot find strength in the market. So push for the euro is on the cards. We're just waiting for it at the moment. This Australian dollar obviously is kind of a perfect storm at the moment with this euro weakness and the Aussie pushing as well. Same as the New Zealand dollar one. Sorry, the Canadian, because we had the strong CAD movement. But yeah, so that one's extended on the hourly still. It's just coming out of extension now. We'll probably be out of it hopefully this morning. So we've had a little bit of a push down this morning. US indices are a bit volatile this morning as well. It is starting to look like it wants to push down again. And there's no more real obvious levels on this. So we've broken the monthly support. We were looking at that for support. It did get a bit of a bounce and then it slammed through it yesterday. We got down to the monthly and then it had a little bit of a bounce and it kind of ground through it. So where we are here now, we've got this tiny little propulsion gap, this tiny little one there at ADR, and then we hit this level. So this is the previous sort of support resistance area, which is 150 ADR. So next stop, really 150 ADR. If this thing's just not taken a rest at all. So waiting, and I've got the feeling we're probably just going to get that at the moment. The way this is going, I mean, fundamentally, obviously it should be like that. But the way it's going at the moment, I'd be happy taking a break even on this thing, to be honest. It's just collapsing. So extended on the hourly, 4 hourly we know is massive extension. I mean, this extension on the 4 hour is just beyond what we are used to seeing. When we get to these levels of extension, you get that massive whipsaw pullback. You know, this is the elastic band theory in practice. The further that it gets stretched, the faster that snapback tends to be. We're just waiting for the catalyst to do it. We haven't got the news events coming until next week for the euro. We've just had the Australian. We didn't get anything. So the market will do what it's going to do, but we're waiting for the profit take move. They are massively loaded on these shorts and they need to get out. So hopefully today we will start to see some movement. I'm hoping the Canadian interest rates will shake the market up a little bit this afternoon. We've got unemployment figures for the US coming out tomorrow. And then we've got unemployment for the Canadian dollar on Friday. So this is the big one this week. And I suspect once that's out the way, we may get some ADR hits and some weekly hits and hopefully some volume coming through and everything. So we'll see. But that one's massively extended at the minute on the 4 hour. Euro CAD, we'll have a look at that while we're looking at the euros. Again, 4 hour RSI extension. We're embedded down here at the 20 level. Again, not much of a profit take. That was a long opportunity on H1M5, which was a straight in, straight out 2 days later. Big, strong push, miles away from the 24. Again, another massive reason to come back up into this area. We are very extended. So big extension there. And again, all the H4 strategies are in drawdown on all of these euro and these New Zealand pairs at the moment. They're just not giving up anything at the minute. So pound odd and pound CAD, you can see the similarities here. Euro and the pound, very similar movements against the Australasian pairs. They always are. You have to be a little bit careful with overexposure on these because they do move very similarly. So your pound odd and your pound CAD all going to look very similar. Huge extension, starting to look like it's rounding bottom. Pound odd, we've got the advantage of being down at this monthly support, which seems to at the moment be holding. So we've got a potential doji going in now. So the buyers tried to work it, the sellers tried to work it, no one won. And basically this is where you tend to see the market go, right, now is the time, get out. When they get out, bang, we're off. So we're just waiting for that initial movement. Again, no catalysts for the pound this week. So it's up to the market to really just start a movement. Same with the Canadian dollar. We're massively extended, but obviously we've got the Canadian dollar rates this afternoon. So what we're hoping for is the Canadian dollar rates to remain as they are, the market to react negatively as it has to most other rates that have remained as they are, and then a drop on the Canadian dollar. Euro CAD, pound CAD, immediately straight back into profit today. We'll get ADR hits to the upside. If the Canadians decide to increase their interest rates, that's going down there, which is going to put us into more pain. So, yeah, interest rate trading, just hard, just really hard, because you've got this thing, which is the catalyst of all catalysts, that is what the market is interested in and nothing else at the moment. That's got to come down. this is what we're interested in. If you're putting these up, we're going to go long on you. If you're putting them down, we're going to go short on you. That's literally all the market is interested in at the moment. So the danger when you're in a position in drawdown and you've got a CAD rate coming out like we have this afternoon is if they decide to go up to 5, it ain't going to come back. You need to get out and take those losses. So we'll see how it goes. That's the other thing. I just reminded myself. Something else I forgot to put in the handbook. And I just got to make a note of it. Stop being a link. I don't want you to be a link. Remove hyperlink. Where's the remove hyperlink button in Word? In a link. What did I just type? Oh my God, my brain. Auto. Oh my God. I'll deal with it later. Right. I'm building this manual at the moment for everybody. I'm nearly done. I just keep thinking of things. Got to put that in. That was one of them. Automatic drawdown control with the EA. So, yeah, where was I? Sorry. Yeah, Canadian dollar. Obviously going to be key this afternoon as to what happens with that, as to where this one goes. And the same with this Euro CAD, obviously extremely squeezed, not going anywhere until that CAD rate comes out. We want the market to react negatively to the Canadian dollar, ideally, which will give these all the drive back up. If you're in them, obviously. If you're not in them, whatever. Okay. But these are all really good opportunities, all really stretched. But just be aware they've got a news catalyst coming. So if you're going to get into these for the first time today, you are literally flipping a coin as to whether the CAD goes up or down on the rates. Aussie dollar, US dollar also extended on the 4 hour. That's just starting to roll over. We've got a nice stall going on with this one. We've just basically moved into kind of a small upward channel. We had a nice flag break there. So there's 2 positions on this one at the moment, starting to weaken. Again, a little bit of a double-edged sword at the moment. I'd kind of like to get a big, strong push on the CAD because that's going to drag the US dollar up, which is going to bring this Aussie US down. But I think there's more chance of the Aussie reducing strength and pulling back anyway. So I'm not too worried about the US dollar, but Aussie needs to rest, basically. Aussie, New Zealand, we know about. So we'll talk about aggressive drawdown control in a minute. This is I've had 2 attempts at it, both failed. I'm on my 3rd. Looks like this is going to fail as well. Nothing you can do. So the more you've got to be careful with aggressive drawdown control because you can get into the habit of just doing aggressive drawdown control and all of a sudden you become a stop loss trader. So at some point you've got to go, right, this is just not working and cut it. Cut some of this off. Get rid of it. So we'll look at that in a minute. So Aussie, New Zealand, massively extended. As you can see, extended embedded. This is a squeeze. This is where we get to do aggressive drawdown control. There is nothing you can do about this. This is not normal. This isn't what the market normally does. Yeah. As you can see, normally when we get extended, we drop. When we get extended, we drop. Yeah, the profit take moves come. When there's a fundamental shift or the market has reacted in an odd way to something it shouldn't and done something it shouldn't have done, you get squeezed. There's nothing you can do. So that is what we're in, the definition of a squeeze. We are coming up to this final propulsion gap, and I'd love to put that stop above this propulsion gap. I can't because it's 1% as it is. I can't risk 2% plus on an aggressive drawdown control position. So this is kind of where we started this big rally to the downside, which was a 2-leg drop. We're coming back up to that for the first time. The likelihood is everybody at the start of this move is out. However, this is where they started the move. If they want the market to continue in a downward movement, that's where they started it. This is potentially where they will start it again. This is how ranges form. So that's potentially where we're going to find some sellers, hopefully. If not, we're looking at coming back up to there, which is 150 ADR. If that's the case, more squeeze. So massively extended, as we know. We're above the 80 level, have been though for it's the 25th of May. So pretty much 2 weeks, haven't we? Aussie dollar Swiss, again, that's a 4-hour RSI extension. Aussie dollar reacted off of the rates. That is a beautiful bounce at the moment off the 72, off the daily 72, and stalling and holding nicely there. So potentially this monthly resistance is our area of resistance, and we're just going to form a range down here. So I just got a load of money. Come on. Got a short running on the NASDAQ. Just tapped into 1.5 hour. Literally, my 1.5 hour TP is there. Literally, the candle touched my TP line. This red line touched it. That break even, that sums up my morning if that breaks even. Right, Aussie dollar Swiss. So yeah, big extension of the 4-hour. That's a lovely move as well with no profit take in it. Again, parabolic, profit take, parabolic, profit take. If this is peak formation low, high, higher low, higher high, higher low, we'd be looking for a pullback 50% roughly, and then a push back up to the upside. If it's going to form a new range, we'll be going all the way back down to there. Propulsion gaps to the downside on the 4-hour. There's loads of propulsion gaps on the hourly as well, which is where I would be more interested in playing. That one there is an obvious one. So there is your accumulation break. That's the propulsion gap that started the break. That's more likely to act as a support on the way back up if they're going to add to their positions and they want the price to go higher. So anywhere down here, if you stick a fib on it, yeah, 38, oops, is a shallow retracement, as we saw there. But that's not obviously off this move, that was there. So 38 would be a shallow retracement, which would be a double bottom bounce. 50% is a normal sort of pullback. 61.8 to 71.9 is a deep pullback. 71.9 being your initial origin of the move. So looks good up here. But as I say, this is a monthly level. We've looked at other monthly levels and it's just screamed straight through this Australian dollar. So we'll see. We need some Swiss franc strength. We need some euro strength. This is what we're missing at the moment. The euro is just not getting manipulated or moved at all. So it's really looking for that thing to push at the minute. That Swiss franc and that euro. We need Lagarde to come out and blow the market up. We just had some positive news on the German results. So it's negative. Up on the year, down on the month. The hell's all this lot just suddenly come in? No further rate hikes expected in Canada and South Korea. What? Rate peaks expected in Australia and the UK from Q2. No hike in Japan until 2024. Fed fund rates peaking at 5.25 to 5.5. ECB rates peaking. So this is just a kind of a summary of what we're expecting, which we know anyway. Right. Okay, so that's your RSI extensions. I'm just locking in $100 just so I don't have a fruitless morning. Oh yeah, sorry, let's have a look at the DAX. Okay, so the DAX, obviously that was the inside bar. So that's the inside bar break. it's broken to the downside. So we are basically now in short from sells at that level. That got slipped again. Look at that slippage. So that was the order. That was the execution. So we got slipped on that as well. And that's just going to stop out in a loss. Look. Not a good day today. Oh, no, sorry. The stop losses are there. That's the stop losses on that position. So, yeah. Slippage central today. Be interested to know if anybody else has got slippage on this. Even on normal market conditions, I'm getting slipped on this account this morning, which is interesting. Way more slippage than normal. Got a lot more profit to make up today, so we need this 5R basically. So need to move down to here to get break even basically today, which is 15880. So 15880 on the DAX is just below the gap fill. So I need the gap fill today. And basically that will take that account back to break even. So the whole idea of that second entry is the loss recovery is first OLB didn't work. Let's get in on the next push. We don't know where the next push is, so we'll wait for an inside bar, which is a pause. And then if they go long, we go long. If they go short, they go short. They're taking it short. So on a trend day, the idea being is you to the OLB doesn't work. You wait for them to move wherever they're going to move to and pause. They will either then do a trend day, in which case we're getting in on the breaks, or they will do a fake move to the downside or the upside and then a reversal, in which case we get in on the reversal. So the idea is if that doesn't work, we wait for them to go where they want to, when they want to, because we don't know when, because you can't time the market. So that's the whole purpose of that second entry, is to take that, hopefully, initial, that second entry in. On the DAX as well, NASDAQ. Right. Anybody got any other pairs they want to have a look at? I'm going to quickly cover oil as well. I'm in buys on the euro US dollar, Daniel. Euro US dollar, this should be going long, really, this euro. I'm not sure about this US dollar, you know, or even though we've got these rate hikes forecast, I'm not convinced the US dollar is going to power up that much. I don't think the market's got any faith in it. I think it's lost faith in the US dollar at the moment, especially what's going on with China and things. I think that's a good buy. You should be all right there. GU. Let's quickly cover oil. So oil, yesterday we didn't really do anything. So opened, dropped, pushed up, closed at the same spot. So we're looking basically on this move. So they pushed out of this accumulation, supported it, added, dropping at the moment. If we get another bounce off of this level here, I think we're going to test those highs and probably come back to test this high here, which is last week's high. So it looks like good longs at the moment on oil, but it is still stuck sideways. So we are in the middle of a range, really. At the minute, not the greatest place in the world to ever take a trade in the middle of a range. Go up. US dollar try, Virginia. Is that a joke? I haven't got try. Probably have got try, but I'm not looking. GU. So GU, at the minute, we're just stuck sideways. Just not doing anything. Sideways. Sideways. So we've got V-shaped recovery there. Last entry on this one was there, in, out. Short was there, in, out. Straight in, straight out. Oh, come on, NASDAQ, put me out of misery. Just sitting there, hovering now. I don't know. It's not going to do anything, is it? You've got targets to the upside. So I suspect they will come up and retest this. The US dollar is going to move alongside the CAD this afternoon. So if we get negative CAD, this is going up. If we get bullish CAD, this is going down. I don't know. US dollar try, just look at it. I don't even think I've got it. I haven't got it. I work with a proper broker. They don't trade crap like that. Haven't got US dollar try. Sorry, can't help you. But yeah, pound US dollar, don't know. Went sideways yesterday, went sideways the day before. We're waiting for the Canadian dollar release. You pick a coin, pick a side, and flip it. That's basically it today. Morning, great Phil. I'm in short on the euro yen. I'm not certain if the yen will have more strength than the euro. At the moment, there's no euro news until next week. So the next euro news we've got coming up is Tuesday, I think. No, Wednesday. No, Thursday. Sorry. I thought we had some earlier than that. Oh, it's that. It's, yeah, so there's no news. So the euro, obviously, next Thursday is the rates. So you're unlikely to see a large movement on the euro until the rate announcement, because the market's not going to want to factor in a huge move in case they're wrong with the rates and that changes. So next Thursday is when the euro is going to move. We've got the press conference same day as well. Following that, we've got the Bank of Japan rate announcement. It's not going to change, never does. That's negative 0.1. I would almost put my mortgage on it. Because it's what it is. Yeah, it's 0.1. It has been 0.1 for 6 years. You go back as far as you want. It's 0.1. Yeah, negative 0.1. That's the Japanese interest rate. That's all it is. So that isn't going to change. However, the press conference, they will moan about FX pricing probably. So the key factor with something like the euro yen at the minute, DAX is dropping nicely. I'm going to hit 1.5 hour target on that first position. So the key with the euro yen at the minute is the US yen. So whether or not we get yen strength will be determined by whether or not the US dollar pushes. If the US dollar pushes and comes back and retests that 140 level, the Japanese will probably want to intervene. If the Japanese intervene, all yen pairs are going to strengthen and every yen cross is going to come down. So this is what you want to be watching if you want to know what's going to happen with the yen, the US dollar yen, because this is what worries the Japanese. When this gets too high, they get involved. So there's no real reason the yen will power up if for any other reason at the moment. We will get strength in there. If we get a massive problem, then money will flow into the yen and the Swissy, as it always does. So if Ukraine, for example, decided to actually invade Russia, or something stupid like that in their spring offensive, the market will get worried. All the money will be pulled out of virtually all currencies and stuck in the yen and the Swiss franc. In which case, then the yen is just going to go, everything against the yen is going to go like that, obviously, as the yen powers up. Other than that, there's no real reason for the yen to power up unless they come out next week and say something. So what you're currently stuck in is something that has no news catalysts until Thursday and Friday next week. So it's probably just going to do something like that. Unless something happens with one of these two. I mean, as I say, everything in this market is driven by the news. The news drives the market. I can't quite believe this thing. So I'm just looking at the... NASDAQ. $560 profit. I'm tempted to take it off, but it has just made a new low. Bear with me a second. I just need to see support coming up. 23 points. Close it. Shut that down. That's done. I'm out of that, so I can concentrate now. Great, Phil Buster. Oh, thank you for the tip. Very kind of you. Thank you for the vast knowledge. Appreciate your help and provide to us novice traders. Thank you very much. Much appreciated. I should go and buy myself a pint. It's going to rain this weekend, so I'll probably wait until next weekend. Thank you very much. It's very kind. US dollar, Turkish lira. A lot of brokers got rid of it. Low margins and big spreads. Yeah. That's what the try is it? The Turkish lira? I've never traded exotics. I've been doing this for 15 years. I don't look at anything exotic. There is absolutely no reason to look at all this stuff, like the ZAR, the Polish zloty, the rand, the peso. It's just no point, because the spreads, as Les just said, the spreads are huge. The movement is there's no volume in it. So somebody goes, oh, I'm going to buy 50 rand. It goes like that. It's literally a volatile beast. You can't make money out of it. It's horrible. So this is why, as you see here, this is Robo Forex. They give us this. Yeah. They put the yuan in there. They put these ones in, but that's it. That's as far as exotics go. Absolutely no reason to look at them though. There's plenty. Yes, exactly. It's up 7.5% today. It's completely random lunacy. Yeah. The Turkish lira, we've just had a massive earthquake in Turkey 3 months ago. So maybe somebody has said there's an aid package or something. I don't know. But we're not interested in it, because it's just not a currency that actually has any sort of oomph, if you like, in the markets. But they just, as I say, they've just had an earthquake, so they're clearing up everything. So it may be that there's something to do with that has affected it in a positive way, which is good. Right. I'm going to do a little bit on drawdown control now. So, so I just need to quickly do a quick calculation on something. Eight. I just trying to figure out how far away I am from passing evaluation on an account. I need one breakout this afternoon. So TP hit on the DAX, second entry, stop loss in profit on that one as well. So if we get down to there today, which is another 65 points without getting stopped out, probably not going to happen. You never know. That will get all that money back basically from that slippage. So just banked 700. So we should be 2K down. We are now, should be now 1,300 down. We're not, we're 2.5, and we're sitting on 700. So see how quickly and easily you can get this back if you don't get crazy slippage like that, but that isn't going to happen. Right, drawdown control. So basically drawdown control, there's multiple ways to do drawdown control. As you can see, I'm just about to get stopped out on one here on the Aussie New Zealand. So drawdown control, obviously you only do when you are in deep drawdown. So whatever your level is where you're getting to, I'm worried about this position, that's when you start your aggressive drawdown control. As you can see, drawdown control I am doing now on this account and on my other account as well. I'm doing this constantly. I think it's a much nicer way to get out of trades which are going against you, because you're getting your lot size reduced gradually, and you're taking very small losses along the way to that profit. When you're in a squeeze, however, obviously it slows down the speed of drawdown that you get into when you do it as we're doing here, gradually. Every one ADR, it's taken off a third of each trade. So you get to that level of uncomfortableness, which for me is about 3% on a position, slower. But when you get there, the chances are you are going to get that move happening. So the point of aggressive drawdown control is if you've got into a trade and it's moved against you to such an extent where you're thinking, I'm in too much deep trouble here, 3% drawdown on my account on this trade, typically it'll be 1 or 2 weeks in. And if you haven't had an out in a couple of weeks, the odds of that elastic band snapping and that drawdown disappearing in 1 day is very high. Because when you look at a normal market, you will find there's an example there, right? This is where we are at the moment. You will find in a normal market, you tend to see cycles of 3 to 5 days. So you'll get 3 days up, a drop, couple of days up, a drop, 3 days down, a push, couple of days up, a drop, couple up, couple down, 2 up, 1 down, 1 up, 1, 2 down, 1 up, 2 down, 1 up. Normal cycle. So the market moves in market structure up and down in 2 to 3 day cycles typically, but up to 5 days at a time. So I'm trying to find a 5-day cycle and I can't see one on this chart, which shows you how, most of the time you're in and out of your positions in a week because the market moves up and it moves down. They push, they profit take. A squeeze is where there's been a fundamental shift or something's happened to a currency pair where it's shifted the odds in the favor of one of them way more than the other. You get more than 5 days movement. By the time you've got to 5 days, you shouldn't be at a level really where you're thinking, I've got to jump on aggressive drawdown control. If you are, you've probably scaled in too fast and too close together. So if you're moving in this sort of distance, which in this case is what, 1, 2, 3, 4, 5, 6, 7, 8, 9 days up, you had a little bit of a pullback in there, probably not enough to get you out. You had a pullback in there, probably not enough to get you out. Then you got a complete A-shaped recovery. That tends to be what happens. So all you've got to do is try and figure out where the end of this move is going to be, because when this move ends, it's fast. And it often ends with a big, strong push. And this is a good example, this one actually. Look, big, strong push. This is the last push. And it's basically the market buyers going, right, we want to continue going long. And there being so few sell orders left because everybody's been run over here that they run out of people that are willing to sell to them. So they have to reach a little bit further to get to those orders. And what you find is a fast move where they just suddenly go, there's no one left. And that is where the market turns. Often you will find it's at a previous level of support and resistance. So whenever I get into aggressive drawdown control, I'm always looking for obvious support resistances. So here we had 2 months ago's, no, it's last month's high, isn't it? No, 2 months ago high. Yeah, 2 month high. So this is where I started to do my drawdown control in here as we were approaching this level. And what I was hoping for was a lower high. Reason being is we had a high, a low, a lower high, a lower low. I was looking for a lower high on that. So I started aggressive drawdown control positions there. I was wrong. I then took another one the next day. I was wrong. And I will keep doing it until we catch the top of that move. Because when we do catch the top of that move, it's going to be fast. Yeah. The elastic band theory, remember from the bootcamp, the further the market gets stretched, the faster the snapback tends to be. Snapbacks off of a profit take in a profit take move are between 38 to 50% retracements of the initial move. So if we know that we're going to get 90% of the time, a 30 to a 50% move minimum, if not an A-shaped recovery, we can get on that with a large position and know that by bringing our average up, we're going to get out of it really quickly and easily, usually within a day, maybe 2. So if you look at this Aussie New Zealand that I've got at the moment, Aggressive drawdown control, I started here. That was the first entry on aggressive drawdown control. This is that monthly level I was speaking about, this purple line here. And I was looking for a lower high. We pushed up into a propulsion gap. I saw a candle which looked like it was rejecting. After a big strong push, we were extended on the RSI, and I thought, right, I'll have a go at one here. It didn't work out. I got stopped out on it, but I got stopped out on ridiculous spread by the broker. But either way, I would have got stopped out on it. The difference is I probably wouldn't have taken a second one that day. So thank you, broker. But that one didn't work. Failed aggressive drawdown control. Then I took a second aggressive here. So the next day we pushed during Asia up, and we had a couple of rejection candles in, and we started to make a new low. So we got a reversal alert in there on the lower time frame. So I entered another aggressive drawdown control. Bear in mind at this point we're something like 7 days up. 1, 2, 3, 4, pause, 5, 6, 7, 8. We were 8 days in. Yeah, 5 being the normal. Don't go much beyond that. 6, start aggressive drawdown control. 7, 8, got to come down at some point, you would normally think. So second aggressive taken there. So that one failed. Second taken there. Market went mental the next day. We had this massive push, stopped out. Okay, fine. Let's wait for the next one. So doing drawdown control all along the way on the positions as normal, but this is the aggressive moves. Tried another one. Yeah, yesterday, big strong candle to the upside, rejection. Bulls tried to take control. Yeah, we put in a bullish engulfing. Next candle, push up, took out that high, rejected. Sellers fully in control. Bear candle, took a short. Yeah. Immediately stopped out on it. And admittedly, with this one, I had the stop up there. And I said, didn't I, as we're coming down here, I said, I don't like the look of it, just in case I'm going to reduce the risk. And I did this in the New York session yesterday. Glad I did. So I reduced myself from 1.2% risk to 0.5% risk. Stopped out, pushed up, accumulated through New York. Today, we're in one. So I took another aggressive drawdown control position here, as we pushed up above that high and we started to pull down. I took another one. Bearing in mind now we're above this monthly high. So my thinking process here is, okay, the monthly high didn't hold. What happens if we don't get a bounce off of a monthly high or a lower high? We quite often get a failed breakout. This is my breakout play. I'm looking at, right, we've pushed up. We're possibly now going to be doing a false breakout. I'll get in with another one. So if this is going to be a false breakout on the monthly level, this is it. This is what, you know, the smart money concept traders are going, oh, this is a liquidity run. This is buy side liquidity on the monthly level. It's not, it's just market movement. But false breakouts happen. So therefore, short. So I'm in short now. Stop above the high. Yeah. Every time I'm taking these positions, I'm using somewhere between half to a full amount of lot sizing. So at the moment, this is a 6. Yeah. So this aggressive drawdown control position here is a 6 lots. The reason that is a 6 lots is if you look at my total lot sizing on it, is because I've now got 16.28 on. When I took this trade, 6 was over half of the current lot sizing on. Yeah. So I would say, let's say, for example, we're going to do aggressive drawdown control position on, let's pick this one here. This one that's at 2%, 7.22 lots on. So I would be looking at that going, right, if I'm going to get an aggressive on that, it's going to be a minimum of 3.5 lots. The whole purpose of aggressive drawdown control is to get this average as close as possible to price, so that when we do get that move start, I can get out of this aggressive drawdown control position and do some drawdown control. All of this will be used to cut this down here and get this under control. That's the purpose of it. We're looking to get in just to get control of the market, control of this position. It's out of control. We've got to slow it down and stop it. So to do that, we need to reduce the lot sizing. But the only way we can reduce lot sizing is by getting in with a big lot to bring our average up so that we can make a decent amount of profit on one big, quick, fast move that we're going to get with a stop loss trade. And then we're going to reduce some of these lower down positions. Yeah. So That one looks like it's going to stop out. So the loss on this is going to end up being 1.1%. So whenever I'm getting into aggressive drawdown control positions, I never want to risk more than 1.5% of the account on an aggressive trade. If you just think about what I'm doing here, I am literally reverting from I'm no longer position trading. I need to take a stop loss trade. So this is a standard stop loss position. I'm getting in with 1% risk or thereabouts on this entry. I'm giving the entry plenty of room to breathe on the hourly time frame. I always use the hourly time frame because it's smooth. And that's it. So it's a stop loss trade with roughly 1% risk, 1.2% in this case. Stop loss placement is as far away from that thing as I can possibly make it with 1%. And see what happens. If it stops out, it stops out. So if this stops out, this will be the fourth failed aggressive drawdown control. At some point, if this thing continues in this parabolic move, which looking historically, it's not often you get these I mean, Aussie New Zealand, actually, to be fair, is probably one of the worst examples. You do get these parabolic moves. This one here, I got stuck long on. Yeah, because I wasn't paying attention to fundamentals. In this case, I do not believe this is a fundamental move. The Aussie dollar fundamentals do not point to the Aussie dollar, New Zealand dollar doing that at all. They just didn't increase their interest. That way they did increase their interest rates, but the New Zealand increased their interest rates and the market came down. That's not right. There's more strength coming through in that New Zealand dollar at some point soon. Unfortunately, though, the Aussies did increase their interest rates. However, the market wasn't particularly impressed with it. So I don't know what's going to happen with this, but at some point, I will say, right, aggressive drawdown control is not working, and I will cut half of this position off. So I will probably have another go at it, but you've got to look at where the next level of aggressive drawdown control is going to be and look at history for previous examples of what has happened. The market repeats itself, never exactly the same, but always roughly the same. So when you get a parabolic move like this, which has moved so fast, so hard with zero profit take, you know the banks are sitting there going, oh, we have got so much P&L on our Aussie New Zealand longs. When we get out of this, boys, we're going to go and buy a new Ferrari. They can't buy that Ferrari until they hit the sell button. They have to get out of the position. They have to sell. So when they sell, it comes down very, very fast and hard. Yeah. Parabolic moves tend to have big drops very quick. Yeah. Yeah. Parabolic drop. Parabolic drop. Yeah. So that is what we're waiting for. And our job with aggressive drawdown control is to make sure that when we get that parabolic drop, we're in it with as much skin in the game as we can possibly get. Big lots, big risk. But look at my average. My average position, this red line here, is at ADR. If I didn't have that aggressive drawdown control position on, my average would be somewhere around about 175 ADR. And ADR is easy to hit. 200 ADR, it's got a 3% chance. So I'm just moving my odds of being able to escape when that parabolic profit take move starts in my favor. And what am I doing? I'm risking 1% for the privilege of moving that up to there. That's the way you've got to look at it. It's a calculated risk. It's a business risk. Businesses lose money. They make the wrong decisions. I've made 3 wrong decisions so far. This possibly is my 4th. I'm 8 pips away from being the 4th. However, this thing could give us a reversal alert in the next candle and then just go bang, bang, bang and hit this support. When it hits that support, I'm sitting in roughly 1.5% net profit on the entire position. My decision then is scrap it, get out and go, oh, hate that, not trading that again. I will, but that's what my brain will be saying right now when that closes. Or I take that off, that aggressive drawdown control position, bank, whatever that is, 2.3%. And then I use that 2.3%, that $2,300 to get rid of that completely, that 1.22, remove a third of that, and we would be above that. So remove maybe a little bit of that. Leave that one on. Yep. And our average, when we take that aggressive drawdown control position off, will be somewhere around about there, which is within an ADR. So if we get this move where we go parabolic for 7 to 10 days, yeah, what happens after that? We get a pullback. That pullback is going to be more than a day. If that happens in one day, what do you think is going to happen the next day? Another down candle. What we normally see, A-shaped recoveries or 50% pullbacks. Yeah. So think of a 50% pullback on this move. And this is where your aggressive drawdown control can make you an awful lot of money. This 6 we've got on here, if I hold this and I do not take it off here, I've got a TP placed here because I want to get out with some money so I can do drawdown control. That's me. If you don't do that and you hold on to that and you assume you're going to get a 50% retracement down to there, that aggressive drawdown control position could be worth 7.5% profit. That one position. Yeah. Just that one position on its own. So you can use aggressive, and I've done this in the past. I don't really like to do it, and I don't do it often because it's kind of gambling, isn't it? I'm hoping that we get a 50% retracement, but even if we only got a 30% retracement on this, which is going to be to there, the P&L on that is going to be 5% on that one trade. So you're going to bank 7 to 10%. Look at my P&L from yesterday. I did aggressive drawdown control, or aggressive drawdown control and normal drawdown control to the tune of 5%. From there to a 200% ADR move, i.e. a 2-day drop on this parabolic move, completely undoes that. That's your choice. There is no right, there is no wrong. Aggressive drawdown control is about bringing the thing into control. If this thing goes bang, hits that level right here, and goes like that, I would be thinking very hard about whether or not I want to close it, because the fact that it's hit this resistance, previous resistance, and hasn't turned into support would tell me that maybe they want another leg down. Should I hold it? Your decision is then, do you hold it? So what you could do is put a trailing stop on it at that level. And if it does continue down, brilliant. We might get some news coming that makes this thing just go pop, 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 and hit 200 ADR. You've no idea. This is the markets. They're incredibly unpredictable, completely random. Anything can happen. So those are your options, and that's how you will execute it. If you do aggressive drawdown control 5 or 6 times and it doesn't work, virtually every time, when you say, screw this, I'm cutting these two, I'm just going to take the 3%, it goes bang. So I always try and hold on for as long as I can. My uncomfortable level is 3%. I'm sitting in 5.5 because this thing has gone parabolic now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days up. Go onto instruments and find 11 days in one direction. It is so unbelievably rare before we get that parabolic move. Yeah, so here's a really good example of one, actually. Look here. On this one, we only got a 23% retracement. Yeah, so you would have needed, in this point here, you would have been thinking, nope, I'm out. A loss. It's a loss. We take losses. It's a position trading strategy. It hasn't got a lot of losses. It still takes losses. You're not going to survive in this without taking losses. You're always going to have losing weeks. You're going to have losing months. Yeah, that would have been a losing month if I had have been long in CAD Swiss and I hadn't had an opportunity to get out of it. But the aggressive drawdown control position that you would have taken down here when that move happened would have got you out of the entire position, because that move was more than an ADR. ADR is 47. That move was 195 pips. Yeah. So there's an exit there. There's an exit there. If you'd have taken aggressive in there. Don't forget, this is a daily chart we're looking at. Yeah. So that's basically how you would do aggressive drawdown control. Let me just take that fib off there. I'll leave it on actually so we can see then. So in a nutshell, that's it. There is no right, there is no wrong. The key rules are half of your initial position that you have open minimum. Yeah. Depending on how confident I am on the level that we've got to, I may take the whole thing. So a 7.22, for example, short on the New Zealand dollar CAD. So we're currently got a long on it. Sorry, not short. We got 7.22 long on it. So if we want to do an aggressive on that one, New Zealand dollar CAD, down here, I might look at this one and go, if we get down and this level here, we get a nice bullish bounce, I might go 7.2 long there, stop loss under that low. If that turns out to be 1.6% instead of 1.5%, whatever, that 7.2 long brings that average from there. I mean, it's within an ADR, so I would never do aggressive on this anyway. But the average from there basically would suddenly jump down to here. So literally we're looking for even a small range to form to give us an exit. Yeah. So you've got, those are the options you've got. It's either a, right, let's go for it and kill the crap out of this and make an absolute fortune, get me out of break even, let me walk away with my 2% loss that I've made in the drawdown control and go, phew, learned a lesson there. Or you get out with some profit, reduce the position and assume that it's going to continue to move to make you profit. Again, no fast rules, no hard rules. You do what you feel comfortable with and you have to try this. Yeah. Sometimes I'll look at it and I'll go, that is the best candlestick I have ever seen off of this area. And I think that is the best thing since sliced bread. I'll get in with 100% of the position. Other times I'll go, this inside bar here, which is closed, the next candle closes as a bull candle. And I'll be thinking, right, this looks like we might be doing some kind of symmetrical contraction. And I really like it long. I'll get in with 50% of my total lot size. So I would take a 3.5 with a stop under there. Tight stop, 3.5. That's probably only going to be 0.75 risk. But it will bring the average right down. And you'll be able to achieve it if it works. Yeah. Think about trading, as we know, is a 50-50 shot. Every time you hit the button, you've got a 50% chance of it going up in your direction or hitting your stop loss. So every time you try an aggressive drawdown control position, there's a 50% chance it's going to work to a degree. It may not go as far as you want it to, but it will go into your favor. If it goes into your favor, protect it with a stop. Yeah, you've got a big risk on the table there. Don't leave that risk on permanently. Take it off, reduce it. If that pushes down for 3 hours, bring that stop with it. Yeah, trail the stop. So, you know, that's literally the way I see it. And they are just normal trades. So if this thing now, for example, Aussie, New Zealand, does that, gives us that hourly reversal alert, then pushes down, and we're suddenly this afternoon sitting at ADR in that propulsion gap, there will be a stop loss at break even on that. Right, pressure's off. I can think now, what do I want to do? Analyze the news. What's coming up on the news? We've got the Canadian announcement coming up at 3 o'clock. If we're sitting here and you've got a break even opportunity on this 10 minutes before the Canadian dollar news is coming out at 3 o'clock on the interest rates, what do you do? No idea. It's up to you, isn't it? You can close the whole thing. You can close this position. You can leave this here and hope that the Aussie completely collapses when the Canadian dollar rate comes out. It could go the other way, in which case you stop out at break even and you're back to square one. You've got to start aggressive drawdown control again. If I had a crystal ball and I could tell you what to do at that position, I would. I haven't. Never have I? Yeah. So there you go. That's aggressive drawdown control. Any questions on it? I will clip that one and we'll stick it up as a video. Because that is as simple as it gets. Any questions? Let me just catch up on the chat. So about this also New Zealand dollar position, you have some money lost on drawdown control. Will you try to get them or just out at break even? On this one, Well, I think I've probably just answered that, haven't I? I don't know. I'll see what happens. The other thing you've got to think about is what your situation is this day, this week, this month. When this gets to break even, yeah, there's going to be different things going through my head when we get there. So I now have an opportunity. That 5% is now 0.00. I am at break even. I have lost money on Aussie New Zealand, probably around about 2 to 3% on these scale outs on the way, on the normal drawdown control that has been done along the way. So I can close this now and go, I lost 2% on that in a week. Damn. I only made 18% last month, so who gives a crap? I'm miles ahead of the game. Or I can say, Aussie New Zealand, you owe me money. I'm holding you. Yeah. But what is happening here is going to determine what you do at this point as well, psychologically. My P&L is sitting at 1.25% on this account. Yeah. So when I get back to here, I'm going to close this out after having taken a loss, and I've got 1.25% loss so far on the month. I can walk away and go, it's the 7th of the month, whatever. I'm just on 1.25. I've got time to get that back up to 5-10% this month. Happy to do that. Or when I get to this point here this afternoon, that has reversed. That has reversed. That's banked. That's banked. This is now sitting at 2.2% for the day. The drawdown on everything else is pretty much flat, and this is now flat. This is showing as a positive figure. That's going to change my mind as to what I do here. Because right now, you've got to get out of the thought process of thinking, this owes me money. Yeah, this Aussie New Zealand doesn't owe me a thing. It's a financial exchange rate, right? It's moved. My EA has scaled me out of positions on it and gone, that's not going well. Let's take some losses along the way. That was yesterday, last week, last month. Today, right now, this instance, none of that matters. This is what's important. This is what's important. These two things alone will make a decision here. What's happened here, I don't care. That was a bad trade on the Aussie New Zealand. It didn't work out. I've had loads of good trades over the last month, which have made me 18% profit. So right now, that 18% profit I made last month is also out the window. This is this month. Last month, you're only as good as your last month of trading, right? If you're having a crap month, you're not good this month. Last month, I was good. This month, I'm not good. What I was last month has got nothing to do with what's going to happen for the rest of this month. Reset every day, reset every day. Nothing to do with yesterday. It's got anything to do with today. Friday made £8,000 scalping. Got nothing to do with today at all. Today it's made $3,000 loss. Nothing to do with last Friday, is it? What happened yesterday? It's got nothing to do with what's going to happen today. Just because yesterday was an up day doesn't mean today's going to be an up day. This could be a massive down day today. Yep. So the decision-making process here is going to be based on where you are comfortable. If you're in huge drawdown, so when we get to here, if that thing still says 7%, I will probably take it off because it's too much pressure. Yeah. If when we get down to here, this thing says 1%, I'll be going, maybe I'll just close that out and I'll close out half and we'll give it tomorrow. Can't make that decision until you get to it. In the same way as when you're scalping on a 5-minute chart, you can't make a decision until that candle's closed. If that candle closes as in like right now, this is an hourly chart, obviously, but there's your high and low, right? This is an inside bar. What is that? Indecision, pause. The market really doesn't want to go higher at the moment, does it? Yeah. So when you get here, if the market has a massive bearish candle like that with a huge wick on it, that's hugely bearish. So when you get there off the back of a massive bear move, these guys are on your side. Do you want to just take it off because you've got there after these guys are saying we're shorting it like crazy? If the next candle closes after that big bear candle when you get there, and what happens is it goes like that, you might have a different thought process on it. But even so, that's a lower low and a lower high. Bearish. Just because the bulls won that round doesn't mean anything. What it means is we've hit ADR, we've run out of steam for the day. So we're not going to go short anymore. Doesn't mean we're going to go long. Again, you can't think like that. You have to think, right now, what's my situation? Phew, do I need to take a breath? Do I need to take a breather? Do I need to just close this lot out and go, ooh, that was horrible. I don't want to go through that again. Analyze it. What went wrong? Nothing went wrong. In this case, I did nothing wrong in this. Absolutely nothing wrong. The New Zealand dollar interest rate came out positive. They increased it. All good. Brilliant. We were expecting that. That's fantastic. Why is the New Zealand dollar weakening? Absolutely no reason for it. Well, that's fine. Then let's get in short. Absolutely nothing wrong with that trade entry. That was in line with fundamentals. We had a massive propulsion move. It was not right. It looked like a fake move. It looked like an incorrect move. The next day it pushed up harder and then it came back down again. We're like, yeah, okay, well, this looks like it's going to come down and test the area. Since then, nothing but pain. Nothing wrong with that decision. This is part of position trading. These things you cannot avoid. So you just deal with them. And that's part of what the aggressive is all about. I set my trading view alarm on US dollar CAD. I'm upside down on EJ, small trade, but 350 out of pounds. Sorry, you're talking to Les. You're talking to Great Filibuster. Okay. US dollar CAD. Okay. Let me just make a note of when that finished. 9:18. Can't remember when I started it, but just so I can clip it out and put it up on YouTube. And I will also put that in the document because that's probably a really good one to have in the aggressive drawdown control. US dollar CAD. So US dollar CAD, obviously, there's two longs on this at the moment from the hourly extension here. This is obviously, today is Canadian dollar interest rate day. No idea. There's your resistance. We're extended on the, I think we're still extended on the 4 hour. I think we might come out now. Yeah, it's come out now. So we come out of this propulsion gap at the moment. So accumulation break. So looking for a push back up into there. But US dollar CAD is range bound. It always is range bound. It spends most of its time in a range. At the moment, we're kind of down towards the lows. So I'd be inclined to look for more longs. But missed the opportunity was this week. Sorry, it was last week, wasn't it? Thursday last week was the initial entry. And we've just accumulated since then. So, but this is going to be decided, obviously, by the CAD rate. So you tell me. We'll find out at 3 o'clock this afternoon. How do you set up the average line? So that's in the indicator, in the support resistance propulsion indicator. And it's just literally the support resistance. No, it's not. Sorry. It's the break-even line on chart. That just averages your positions out. New Zealand dollar CAD. So same thing with this one. This is, all these New Zealands are the same. Interest rates. So look at the fundamentals on it, basically. The New Zealand, yeah, we went up by 0.25%. We were forecasting 0.25%. It's the highest interest rate in the G7, G8, whatever it is. It keeps changing. Depends if Russia's in being a friend or not. It's high, yeah. We should be seeing strength in this. We were forecasting a rise. We got a rise. The market collapsed. But we had the same thing with the euro. We were forecast a rise. We got a rise. The euro collapsed. The US dollar, last time it put its interest rates up, went like that. So the market seems, you can't look at an interest rate rise and see it as bearish. It's just not done. It's not what happens. However, because we're reaching terminal rates on these, I think the market just doesn't want to rally on them. I'm very surprised in the speed of drop, though. If it doesn't want to rally on them, fine. That's what we would normally expect. But there's no reason to collapse it. So that's what's basically caught me unawares on these New Zealand dollar ones, and they don't seem to be recovering. So I'm just hoping for a Canadian dollar weakness. That gets us out of all these. Canadian dollar strength is going to hurt. If the Canadians actually increase their interest rates instead of freezing them, it's going to hurt like hell. We will be in a 5% loss again today. But, well, I will be. This account will be. I'm not, because obviously this is just a... this is just running every trade on the EA. What's that? Fib. That? Fibs that just... There's another one there. Leave lines all over the charts. This is the trouble. Where's that one? Fib, where are you? God, could be anywhere, couldn't it? Yeah, so New Zealand dollar CAD at the moment, hourly extension, nothing. 4-hour extension we're coming out of, but again, it's another embedded. Yeah, so it's the Australasian pairs. They're just both upside down. Right. CAD yen and pound New Zealand. So CAD yen again, it's just down to what's going to happen with the rates. So had an entry on that Friday last week, which got out on Monday. Sideways. No reason to get into anything there. Was a short. It's long at the moment. Everything's always long against the yen until it's not. This is the thing with the yen. Everything is always beating the yen because the yen's interest rates are always negative 0.1. So everything's always going to be better and more attractive to put your money into than the yen is, until the yen turn around and go, screw you guys, we're going to rally and pump it. And then it comes down and then the market recovers from it again. Then they pump it and then it goes. That's the cycle. And that will be the cycle as long as we've got high interest rates everywhere else in the world. So it's always, everything's always going to be a long until it's not. And this is what makes the yen so difficult to trade as a position trader. You're going to get these points where you're longing it, milking it, and then you get absolutely hammered for weeks when you get into a squeeze on the yen. So I always prefer to short it. Every long, I'm always worried because you never know when this is coming. What they often do is the US dollar yen is the easiest way to explain it. They give you a warning shot like that, where you get a huge 200 to 300 ADR move on the yen. They pump it massively. And then the market's like, whoa, what the hell was that? And then they'll come out and say, we are closely monitoring the FX markets. And you'll be like, okay, that was you. No, we did not intervene. Okay, well, there's no one else that did that. And then the market goes, well, fine. And then they go, no, we're not kidding. And they intervene again and say, if these continue, we will do something with our whatever's fundamentals. And then what they actually mean is we're going to manipulate the FX markets. And then the market goes, all right. And they don't move it enough. And then they go, bang. Yeah. So we get these beautiful rallies and then the yen gets powerful. And then the market goes, well, we still don't want to put our money in the yen. And then they go, we're not kidding, guys. Bang. You get that slam again. At the moment, as soon as we hit 140, UADA started saying, we are closely monitoring the FX market. So this is your first clue that they're thinking about potentially pumping it. And as soon as they said that, the market went, all right. Yeah, that happened. That's when UADA said, we don't like this level. And the market went, all right, sorry. You know, it's like a kid. It's like poking you, saying, stop that, stop it. All right. That's basically how it works with the yen. That's the only thing that moves it. So up to you what you do with yens. CAD yen obviously is totally up to the Canadian dollar interest rates this afternoon. That's going to fly or it's going to pump down. If we get positive movement on the CAD, the US dollar will rally with it. If the US dollar rallies above that 140 level today, i.e. we get a 150 ADR plus on the Canadian dollar news, the rest of this week, you want to keep a close eye on financial juice. Get some movement out of the yen. I think we'll get some talk out of the yen at least. But at the moment, it's not doing anything. It's really, really safe. It's a funny thing. It's really safe to trade. There's shorts there, no problem. Long there, no problem. Short there, no problem. Short there, no problem. Any other longs? No. Absolutely fine to trade when it's fine to trade. And it's one of those things when it's not fine to trade, you're stuffed. A lot of people don't trade it. I do. I don't care. Just deal with it. Pound New Zealand. Again, right. So look at the pound New Zealand. Yeah. Now look at the Aussie New Zealand. Ring any bells? That's going to stop out in a minute. Look. This was a very, very similar squeeze, although this was only 4 positions in. And I did 1 drawdown control on this, and I timed it perfect. Happens. And out. And New Zealand since then hasn't gone anywhere. Sideways. The pound is bullish. Fundamentally, we should be seeing further. We know we're going to get more interest rate rises, possibly 0.75 to 1%. So when you look at it on the world stage, we're looking at going up to 5.5. 5.5 to 5.25. Basically, we're looking at going up to the same as the US dollar and New Zealand, except we're not there yet. Our interest rates are far too high. We've just had our explosive move on inflation, so that will drop to a much smaller number, slowing that rate down, meaning we need more of that, making the pound bullish. So you want to be buying the pound. However, this New Zealand dollar should not have depowered in the way that it did. We should have some strength coming through in the New Zealand dollar as well. So it might be that we get a little bit of that for a while. But at the moment, it's just not set up for anything. Bullish overall, though. Go look at the buyer scorecard. It's currently a -1 range. It's basically it's range bound. Look, this is what I mean. The fundamentals do not stand up for New Zealand dollar collapsing the way that it did. It just doesn't stand up. It's just the market basically squeezing the crap out of everybody because it can, you know, money makes money. Banks have got bigger pockets than everybody. Do what the hell they like for as long as they like. And when they're ready to take their money, they'll take their money, but they will take their money. Stevie, great analysis on DD control. Yeah, cool. I will clip that out and we'll put that up on YouTube. We're both looking at a sell-off on yen pairs. On yen pairs patterns, say yes. Yeah, yen pairs, I think you'll find. Like I say, it's just so impossible to predict anything with the yen. And when the yen goes, the yen goes. It just goes like days. But look at it again, what I was talking about earlier with the daily cycles with the yen, yeah? It's the same with everything. You get like 1, 2, 3, 4, 5, bang, bang, bang. 1, 2, 3, 4, 5, bang, bang, bang. Yeah. 2 days up, 3 days down. Mixed. Multiple days down, multiple days up. Huge push to the downside, 6 days up. 4 days down, push up. 2 days down, push up. This is market structure. This is a squeeze. This whole move is a squeeze on the euro yen, look. There. But you got an exit. You would have got in. You wouldn't have got in anywhere but there. Probably not even there. When is this? 29th of March. Yeah. So you'd have got in there. You got it out. You'd have got in there. And then it didn't come back. So you'd have got in. 104 is ADR. You'd have been in somewhere in the region of 2, maybe 3 positions within that range and out there. If you weren't out there, you were out there. And then you got that big, strong push. That's where I got in, out. Yeah. So in that move there, you had an in and out, an in, out, and in and out when you were shorting it against this massive euro-yen trend. Look. In that move, you had 3 successful shorts that took no more than 2 to 3 positions. Yeah, it's only when it goes parabolic. That's the only time that that you're going to get position trading struggle to help. It's if it's parabolic, and it's not parabolic unless there's a reason for it going parabolic, and it's normally an unexpected rate announcement, and we didn't get any of that. This is why, these are unexpected squeezes. But when you've got the wrong side of something, so for example, the Canadians, if the Canadians come out this afternoon and they put their interest rates up, what's the CAD exposure here? Too short. I'm the same, pretty much. I'm the same exposure on the CAD. So if the Canadians come out this afternoon and they increase those interest rates, you probably want to get out some CAD. Yeah. Even if you're in drawdown on it, this is only going to get worse. Yeah. If they've increased their interest rates and we weren't expecting them to, the Canadian dollar is going to fly for days. You need to get out some, not necessarily all of it, but get out some. 2 exposures. This is why the exposure rule is so important. Yeah. Look at what's happening to me. Well, not this. What's happened to this account with the Australian dollar. Yeah. It's short. The Australian dollar interest rates has gone up. Yeah. Pain. You get pain if you're overexposed. That's why the rule is there. And that's partly why I wanted these accounts. I want these accounts running so that you can see it's like, don't do this. It's not a case of do this. It's don't do this. This is why the rule is there. This is why this document is coming out, which is like exposure. It talks about exposure rules in there. What's the most important things about trading about position trading? Sizing, spacing, exposure. Keep your lot sizing small, risk. Keep your spacing decent distance. Do not overexpose yourself. Why? This is just, you follow these 3 rules, you'll be absolutely fine. You're still going to get squeezed. You're still going to get hurt sometimes, but you're not going to happen very often. If you overexpose yourself, or you space your positions too close together, or you go in way too hard and too fast with your sizing, it ain't going to work. Everybody that gets in touch with me says, I'm in 23% drawdown on my account. How? Or I got in a bit too hard with my lot sizing. This is this document. Go and read this document. Don't come back until you've read it. Detention. Now. Right. That's everything covered, I think. So, still haven't stopped out of Aussie New Zealand. It's getting close. Let's see how the DAX trade is going on. Very nice. We've got a new short on the DAX. So 2 more profits on that. So that was the inside bar breakout short. TP, trailing stop TP. We have just got a new inside bar here. So yeah, so that's a double top. Inside bar. So pending order on short. Just make sure that pending went on. The buy stops are in place there. Right. Okay, so this is part of why I wanted to forward test this. So what? Right, okay, so that's the setting. Okay, so basically I've got this set up to say delete opposite pending orders when a trade is triggered false. The idea behind that is if we break to the downside, I want to, and it fails, I want to break to the upside. So with this one, it broke to the downside. I want to leave that there in case this fails, and then I want to break to the upside. What I haven't encountered is those two stop out, and that pending hasn't been placed on this inside bar because we've got one in play. So I need to figure out a way to close that pending. So the logic will be, if we're flat and the last trade was a profit, close the previous pending. That's complicated. There you go. So that 3,300 is now turned into an 1,800. So we're chipping away. We'll see how we get on. We'll find out in New York how that ends up. Good experiment today. GJ forecast, don't know. It's in the middle, innit? So it's not extended. No reason to be in it. Sideways. So big propulsion gap, although that might be filled really. That's done, I would say. So right now we're pushing up into there out of a double bottom bounce from yesterday's low. It's either going to go up and come up and test those highs, or it's going to bounce out of there and come back down and test last week's low. Come on, you should know this by now. I don't know. I don't take trades unless the market is stretched. I'm waiting for the banks to profit take. If the banks aren't moving, I'm not interested. If you really want to take a trade on this GJ, going there or it's going there. Yeah. So if you want to go long, stick a stop loss somewhere. If you want to go short, stick a stop loss somewhere. But make sure that your risk reward at those levels is more than your stop loss. If you want to position trade it, you're just flipping a coin. So there's absolutely no reason to go into this at all. You're short since 174. Cool. Why are you asking me for a forecast? You're short. Well done. You're in profit. Put it in the bank. You got in on that extension, I guess. Yeah, if you're short since 174, that's moved down over an ADR. Why are you not out? Why have you not taken profit? This is why ADR is so important in everything I do. The reason this is bouncing off of there is because it doesn't move beyond an average daily range more than 42% of the time. So 58% of the time, the market is within its average daily range. If you've taken a short and it's moved down more than its average daily range, you should be out because it's extended beyond where it should be. What happens after it's extended beyond where it should be? It pulls back. Yeah? So all you're seeing is now your profit dwindling away, with the potential for it to come back and test this high and put you into drawdown. You've got profit, take profit. You've won. If you're targeting this propulsion gap, I would say this propulsion gap is pretty much filled. Look at the wicks on it. When we pushed up, this isn't even a propulsion gap, proper one, is it? It's not an accumulation break. It's a V-shaped move, but look. I mean, it's pretty much done, isn't it? They've tested it. There's not really any unfinished business there, I wouldn't expect. But there's lots of targets to the downside. That one's done, I would say as well. That one's done. So, I mean, yeah, that area maybe. But, I mean, it's fine. I don't know what your entry is, what your strategy is, what you're doing, but 171.24, but yeah, I wouldn't be surprised if I'm taken out sometime. So if you think you might get taken out, why not put it in the bank and go and spend it? Aiming for the blue line and trailing. Trailing stops get stopped out. That's what trailing stops are. They're a stop profit order. If you use trailing stop, it will get stopped out. Look at my trailing stops on the DAX. I said, didn't I? Target was down here. I'd be very surprised if we hit that, because the trading stop will take me out before that. Its job is to reduce risk. Its job is also to stop you hitting targets. Double-edged sword. This is the thing. Should I use a trading stop or not? There's no answer to that, is there? The days where it goes like that, trading stops are irrelevant. The days where it goes like that, trading stops stop you getting your profit. The day that it goes like that, trading stops reduce your loss. So they stop you making profit. They stop you making loss. At the end of the day, a stop loss stops you out like that. Yeah, it trailed down a little bit and stopped me out with a little bit of a loss. That's annoying. That needs to be changed. I have to think about how to implement that. It would be interesting if I kept track of trailing stops, see how often they're hit versus if I kept an initial stop. 100% of the time. Not 100% of the time, but high 80s, 90s. There's 3 on the screen in front of you right here, trading stops. Every single one of them has been hit. Market movement means that trading stops get hit. If you have a trend, your trading stop's going to get hit. You've no way of knowing what a pullback will be. How big, how deep. Some of them are 30, some of them are 23, some of them are 38, some of them are 50, some of them are 61.8, some of them are 71.9, some of them are 100%. Where do you put your trading stop? It's going to be different every time. Every leg is going to have a different length of pullback. Trading stop is impossible to calculate. You just pick one and you go, hopefully that's right. Some days it will be, some days it won't. Some days the breakouts will work, some days they won't. Some days the trends will work, some days they won't. There is no system or strategy on the planet that works. They all fail. I've covered this many times. There's a video on it. Why you've got to stop buying courses. Because all systems and all strategies fail. Every single one of them. Most of them use trailing stops. Most of them also use scale out of half positions. Mark, I saw your comment before you retracted it. No rant today. No, there's no rant today. I'm making myself feel better by creating a document that I can hand out to people. So the next time people want to attack me in Telegram or anywhere else because they've done something wrong or they think I'm doing something wrong, I will send them this document and say, do not talk to me again until you've read that document, because until you've read that document, you've no idea what I'm doing. And if you're doing it differently to the way that I'm doing it, that's not my problem, it's your problem. So I've fixed my problem with a document. And I'm very proud of it. I'm chuffed with myself because I'm thinking, I'm writing this thing and going like, this is every problem everybody ever has, every question I ever get asked, just answered. But what's going to happen is I'm going to give people this document and say, yeah, but I don't want to read that. Can you just... And that is immediately when I'm going to go off the boil. I'm going to go mental at them. But that's my prerogative. You can also double O. I don't know what your name is because it's just 00. But you can also, as well, if you've got an EA and you're trading a strategy within EA, test different trading stops. You'll see the difference. So with the opening range breakout EA, if you do a test with a trailing stop turned on and off, you'll see a really different result. Really different. But you will find there'll be some instances where you're going, oh, thank God for the trading stop. And there'll be some instances where you're like, oh, if the trading stop wasn't there. At the end of the day, I've battled with trading stops all my life. I still have no, look at this DAX. I still have no love for them in any shape or form. You just stopped me out with $600 odd and now you're going to collapse. Yeah, this is what trailing stops do. If I'd have left the stop there, I'm in profit right now. It's just, you can't win. If this thing had gone bang, 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 I'd be going, trailing stop, you're my best buddy. Right now, I'm like, trailing stop, I hate you. It's an absolute nightmare, trailing stops. I hate them and I love them. It's just horrible. They're horrible, horrible things. Love, hate. It's like Marmite. You will never, ever be able to make up your mind as to whether or not you want to use them or not. And every back test you do will give you completely mixed results. So up to you. I'm using them only because they reduce drawdown. But if this thing now slams down to 5R, I'll be pissed off because it'll be $3,000 I should have had and I haven't because of that trailing stop thing. The euro suddenly goes poing, the DAX is going to go down. Yeah. Massive 1 hour candle on the euro to the upside. This is going down. Trailing stop killed me. By the way, do you backtest MT5, MT4? I always use everything. I don't use MT5 at all. The only reason I use the only reason I've got MT5 installed is to test my indicators and EAs. Don't use it, even for backtesting. I don't like not having complete control. Yeah. So when I'm backtesting in here, yeah, I am using the data provider of my choice, the data set up in the way that I want it set up. I can verify the data. I can check everything. I can see that the data in the backtest matches what my broker would have supplied me. I can use variable spreads supplied by the broker. I can do everything to the exact degree of accuracy that I want to. MT5, can't do any of this. MT5 just goes, here's data. I've no idea where it comes from. I've no idea if it's my brokers or if it's provided by a third party. I've no idea how accurate it is. I've no idea what the spreads are, whether they're accurate spreads, whether they're broker provided spreads. I know nothing. You cannot develop or build anything based on a hope. That's okay. You've got to know 100%. I know that Dukascopy data is 100% matched to my brokers, and it is as accurate as you can get. I use that. I can't do this in MT5. I don't use it. Yes, I'd love to, because MT5's got a slightly better backtesting engine, and it can be made to be faster if they'd have built the thing to use every core on your PC, but they suddenly decided, now we'll only let you use one. I've got 18 cores in my machine, right? I can backtest with one of them. I could backtest 18 times faster if MT5 had half a brain on how to build software, meta quotes. But they just, for some reason, went, nah, let's give them this all-powerful machine and let them use an 18th of it, in my case. So that's just why I use MT4 and why I just have a bee in my bonnet about MT5. They just ruined a really good opportunity to have I tried TradingView? Yeah, I don't use it. My thing. Right, I'll leave it there. Anything else you need, let me know. I will be back this afternoon at 2:20 for the New York session. As usual, we'll have a look at the ORBs. We'll see how the DAX got on. Don't think it's going to get on any further. I'm just going to close that, delete those off manually myself. I've got to recode that. So I just want to make sure that I'm taking new inside bar breaks if we get them. So I've got a chance of making some money back if the DAX has a rally. So yeah, I'll be back this afternoon. Anything you need, I'll be in Telegram. I'll be working on the document. I'll be working on that fix on that EA and all sorts of other stuff. But until then, hopefully everything goes well. And we've got to wait until the CAD this afternoon. So 3 o'clock this afternoon, all hell breaks loose. Until then, I think you'll probably just be better off watching paint dry today. So, all right, have a good day. If I don't see you later, tomorrow morning, 7:50. Otherwise, see you this afternoon.